All right, as usual, gang, I have you all on mute. So if you have any questions, please feel free to type it as we go along, and I'll be able to stop the presentation and talk to you about any question. I'm going to share my desktop now, so you should be seeing my screen here in a moment. All right, wonderful. Okay, everyone. So we had an interesting day today. First thing, as you all know, first thing I do every morning, actually every week, is I check Forex Factory. Okay, Forex Factory is a full resource we've talked about on these webinars, and it's a wealth of information, all the important daily economic happenings, indicators, announcements, news events, all those things worldwide are reported here for us in this handy-dandy website, along with when the news is being announced on a daily basis, what the forecast number is, and then what the actuals are, so we can compare the actual numbers to the forecasted number, okay? So you see, we're primarily concerned about the high impact news events. Those are usually the events that move the market one way or the other, up or down, okay? And those are the ones that are designated by the red rectangle here, okay? The red rectangle here. So you see, for today, Tuesday, January 13th, we only had one high impact event happening, okay? And that was on the Great British Pound. And that was at 2:30 a.m. Mountain Time. Now, obviously, I wasn't up for that, but there are ways to trade that we'll talk about later on. However, so the Great British Pound, the GBP, they were announcing their CPI numbers, okay? Well, Craig, what is CPI? I have no idea what that is. I'm new to trading. I don't know all these different indicators and all these global happenings on a micro and macroeconomic level. What is it? Well, another great part about this website is that it tells you in detail exactly what each indicator is, in detail, what they are, who creates them, why it's important, all these things, okay? And all you have to do to find that is click on this little folder right here, and it brings up all the information. Who creates it? Well, it's the Office for National Statistics. What does it measure? It measures the change in the price of goods and services purchased by consumers, okay? Frequency, it's released every month, okay? What is it? Well, this is considered to be the UK's most important inflation data because it's used as the central bank's inflation target. And that's super important, right? Super important stuff there, okay? Very, very important. You have to know what that is because the central bank, just like our Federal Reserve, has a huge effect on our economy, gang. Huge. Everyone needs to understand that. We went over this last Thursday in the webinar about our Federal Reserve and how much power they have over our economy and global economy, gang. So you really need to be well aware of these different large central bank bodies. In England, it is the BOE, okay? So, why do we care? Well, consumer prices account for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead the central bank to raise interest rates out of respect for their inflation containment mandate. And you find that's pretty universal, okay? What does that mean in plain English? Most central banks have a mandate from their government to keep inflation right around 2%. Right around 2%. It can fluctuate a little bit here and there. Here in the States, though, they want to keep it right around 2% per year, okay? They don't want the prices of goods and services to be escalating out of control. And when they do see that inflation creeping into the economy, that's when they raise interest rates to help slow down spending, which in turn lowers the cost of goods and services, okay? So what happened this morning at 2:30 a.m.? Well, you can see they're planning on a 0.7% CPI number, but it only came in at 0.5%. So, quick poll here. What should have happened to the Great British Pound this morning? You type it in. You think it should have got stronger or weaker today? Let's go ahead and type it in, gang. Did the Great British Pound get stronger or weaker today based on that news this morning? Very good, Keith. Weaker. That's right. Exactly right. Very good, Lucinda. Very good. So, weaker, but it was further than expected. Yeah, good point, Shelby. So let's take a look at that. Let's take a look. So here we have the Great British Pound versus the US dollar. Okay, the Great British Pound versus the US dollar chart. And oh my goodness, look at this big downturn here. Okay, so this moved down. Guess when it happened? It happened right at 2:30 a.m. this morning. Okay, right at 2:30 a.m. this morning. Now, when the price moves down on this chart, that's the US dollar getting stronger and the pound getting weaker. Okay, now it came right down to a support level that I previously had in here. And we're going to go into a little lesson here on support and resistance. I got asked to kind of define support and resistance a little bit better and talk about why it's so important. So we'll go into that here in a few minutes, okay? So it kicked off a big downtrend. Wonderful. Well, Craig, wait a minute though. That happened at 2:30 in the morning. I'm sleeping. I'm not going to get up at 2:30 in the morning to trade. No, you don't have to. So that's where you can place trades. You can place pending orders. Now I knew yesterday or the day before even, or even last week, that this number is coming out at 2:30 a.m. And this is kind of leading me into the discussion of support and resistance. Okay? So I had my support and resistance lines in here last night. So before I went to bed, I saw that the pound versus the dollar was just consolidating, meaning moving sideways on me here. Okay? So I had my resistance line up top here. I had a support line down here. I'll tell you why I put them there a little bit later on. So basically, I had a pending order below my support line here and a pending order above my resistance line here that I put in last night. Okay? So it didn't matter if news was good or bad. I had trades waiting, complete with target profits, take profit numbers, and stop loss numbers on both sides of this trade. Okay? And sure enough, my sell stop, my pending sell order was triggered this morning before I even got up. So I got up to a nice profit based on this downward movement, based on that news that came out at 2:30 a.m. Okay? So that's how you can trade moves without having to be sitting here at your computer. And we teach you in detail in our private coaching how to do that. Okay? Now tomorrow morning, wow, a lot happening tomorrow. A lot happening on Wednesday, okay? Now these times are mountain times, but you can set your own Forex factory to your local time there, wherever you are in the country, okay? So at 6:30 a.m. mountain time tomorrow morning, you see the U.S. is releasing their core retail sales numbers, their retail sales numbers, and we have the BOE, the Bank of England Governor Carney speaking. So that's the counterpart of our Federal Reserve Chairperson, Janet Yellen, okay? That's a big one, big one. Whenever the BOE or any head of the central bank is talking, you see he's due to testify on the Financial Stability Report before the Treasury Select Committee in London. So he most likely will be talking about what's happening with the British economy, interest rates, unemployment, inflation, all those important hot buttons for the British economy, okay? Now, core retail sales and retail sales. Well, why is there a distinction there? Well, if you look at core retail sales, it's the change in the total value of sales at the retail level, excluding automobiles. Okay, automobile sales account for about 20% of retail sales, but they tend to be very volatile and can distort the underlying trend. The core data is therefore thought to be a better gauge of spending trends. Okay, now retail sales will include automobile sales in it. So both of those numbers will be released tomorrow morning at 6:30 a.m. and it's affecting the US dollar. So I will be up tomorrow morning at 6:30 to trade that. But even if I wasn't going to be up, I could set my pending trades here. As long as I'm following the rules, my support and resistance and my indicators, I can look at the dollar-yen, I can look at the euro-dollar, I can look at any pair, the dollar-Swissy, any pair that has the US dollar in it, and I can set my pending orders on either side of it, depending on what the news happens, okay? Now, like I said, I will be up tomorrow morning to trade that, so I won't place any pending trades. I'll just place my trades tomorrow morning when I get up and look at the charts, okay? Also tomorrow night at 5:30 p.m., we have even more news coming out. We have employment change numbers from Australia and the unemployment rate, And you see, we already have the forecasted numbers in here. So all we have to do, gang, is understand when the news comes out at 5:30 p.m. tomorrow night, hey, did it meet it? Did it exceed it? Did it fall short of it? And have our trades in before that news happens, and you're able to take advantage of these news events. Like this morning, and this was a big move on the pound dollar. This was a big move, okay? Now, I didn't capture all of it. I captured about a third of it, okay? So I waited until it broke below my support level to get involved on this trade. But this was about a, this eyeball in here, it's about a 70 pip move. Now remember, gang, I'm only shooting for about 20 pips per day. That's all I want from myself and my student. Of course, I'll take more if the trade is dictating it. But if I can average 20 pips per day and I'm risking $10 per pip, well, that's $4,000 per month, okay? That's more than most people earn in this country of ours, this great country of ours, okay? So that's really good money or life-changing money, especially if it's just part-time money for most people. You know, next to basically 50 grand a year, just following simple, easy to follow indicators and strategies. Now, hear me clearly, trading is not easy. It takes work and discipline, but it's certainly pie in the sky goals. You've heard me say it before, I hate all the, a lot of the other advertisements you hear out there that you can make, hundreds of pips or thousands of pips per week or per day. And that stuff really bothers me because it's not realistic for the average person. It's just not. Trading was super easy, the whole world would do it. Okay, it's not easy. It takes time, it takes discipline, it takes training. And that's why you need a good mentor that can hold your hand and walk you through it. Start with a demo account where you're not risking any money until you get proficient and high percentage of win rate, then you go and start trading real money. But if you can do that, trading is a wonderful way to either supplement your income or even replace your income. And it gives you a huge amount of freedom, okay? All right. So hopefully you all understood that. If you have any questions about that we decided here, let me know. I'm going to delve into support and resistance here. I got asked again by one of our students on this webinar to kind of delve into that and what I look for when I'm setting support and resistance. I think now you see the importance of it. So let's talk about it, okay? So support and resistance. Now, you've all heard me say that the trend is your friend. The trend is your friend, and it absolutely is. And that means if a chart is trending upwards, we're looking for buying opportunities. If a chart is trending downwards, we're looking for selling opportunities. And that's, nothing more to that rule than that. The trend is your friend. Okay, you don't want to fight the trend. Now, there are counter trend traders out there. Some people swear by it. I don't like it. I've never seen, this is just my opinion, I'm not saying I'm right about everything, but just my opinion, I've never seen someone be a long-term profitable counter trend trader. But there are folks out there who swear by it, absolutely. I've just never seen it. I prefer to go with the trend and work that way, okay? Now here's a very simplistic representation of an uptrend. Now, we all know that prices don't move up in a straight line. Well, very rarely, okay, and certainly not sustained for a long period of time. There's always got to be an up leg, and a down leg, and an up leg, and a down leg, and so forth, right? Okay? So what we're looking for, we see these peaks, those can be potential resistance levels. And we see the valleys, the bottom of the valley, those are potential support levels, okay? And this is where we're looking to draw our lines of support and resistance. And we're looking for the most touches possible when we are drawing support and resistance lines on our charts, okay? So, and the same thing in a downtrend. Doesn't go straight down. You have multiple legs. Downtrend, down leg, up leg, and so forth. But it's the same concept. The peaks are resistance, the valleys are support, okay? Now here we see an example of a chart where we have our bars or candlesticks moving up to a certain level, bounces down off of resistance, bounces back up off of support, and finally breaks through resistance, okay? Because remember, resistance and support levels are made to be broken eventually, okay? Now, a very important piece I'm going to add to this, very important piece. Once resistance gets broken, it becomes support. You can see that here very clearly. This resistance line got broken right here, and you see the candlesticks had a hard time getting back below it. Okay? They went up again, bounced down off of this line of resistance, bounced off of this support, bounced above resistance here, and now it's resistance again over here. So prices seek out historical levels time and time and time again. When resistance gets broken, it becomes support. When support gets broken, it becomes resistance. Okay? And we'll show you some examples of that on the charts coming up here and live charts so you see it. Now, what we look for when we're setting lines of support and resistance are what's called consolidation. Okay? When prices get stuck in a very narrow price range. For example, this is a great example of it here. Okay? You have resistance on top, you have support on the bottom. Okay? Now, you will see that some of these bars are poking through my resistance line and my support line, and that's okay. I'm just trying to get a general feel, okay, for the sideways movement. Drawing lines of support and resistance is more of an art than a hard and fast science. Okay? I'm trying to get a general feel for that sideways movement. Well, wait a minute, Craig, but here we have kind of a breakout here. Why wouldn't you go for a buy there? It's breaking out resistance. Well, that can be a head fake, what we call a head fake, right? You see it came out, but then it came right back down again, didn't it? It didn't break out for good until 3 candles later, in this case 3 bars later. Okay? So how do you avoid those head fakes? Well, that's where our other indicators come in as well. Okay? All right. Now, another example of support and resistance. Here we have resistance on top, support down below, another head fake there. That could have sucked you into a sell, then retreated. Now, oftentimes new traders get sucked into these head fakes, and they end up losing money, close the trade, and then the trade does do what they thought it would do initially. And it can be very frustrating for a new trader. Okay? So these head fakes are very important to figure out and understand how to avoid them. You see another example of it here. We had a nice period of consolidation with resistance and support. Breaks down below, you think, okay, we're breaking out. Great. Time for a sell. Uh-oh. Turns around, takes off, goes to the upside again. Okay? But resistance and support are key factors to become really, really good at. You have to know where to place them and when, because our indicators tell us if we're going to buy or sell. Our moving averages tell us that. Our MACD tell us that. Okay? But support and resistance tell us when we should be buying and selling. Okay? When we should be buying and selling. So you got to have both parts of that equation. The buying or selling, what are we doing? And then when should we buy or sell? Okay? Very important. Got to have both of those. All right. Now, let's talk a little bit about trend lines, because trend lines can help us with our support and resistance as well. Pardon me. All right. So trend lines, okay, in this example here, clearly we have a high point on this chart here. We have some low points down here. Okay, fantastic. Those can help us draw some support and resistance lines, okay? All right, now, sometimes we have to look further back in time to get multiple touches, okay? Longer time frames on our charts. I'm going to show you that here in a couple of minutes. But sometimes you need to look back further in time than the current chart you're on to see where should I be drawing my support and resistance, okay? And again, you see here, our candle went through our support line. That's okay. We're trying to get that general feel again, aren't we? All right. Now, trend lines. Here we're clearly in an uptrend here, so we're drawing the trend line along the bottom of these candlesticks all the way up. Well, okay, Craig, why is that important? Well, trend lines can help you identify when a trend is over. Okay, so you see the trend line here. We're a nice steep uptrend here until finally the candles break through. They break through the trend line, and then it starts moving sideways on us, doesn't it? Starting to consolidate there. Okay, same thing over here. Breaks through the trend line and starts to consolidate. So it can be a very helpful tool when you're trying to find, okay, are we still in an uptrend, or are we going to be looking at breaking this trend and taking a breather, looking for some consolidation? Okay. Now, sometimes you have to draw a trend line in two lines. So you see here, we're drawing a trend line right here, but then the angle of the chart steepens up a little bit. And that's okay. You simply draw it in two lines. So we draw the first line here, and then it steepens up, and we draw it going up this way, and now we have a breakthrough, which is partly telling us, okay, this upward trend is done. We're looking for some consolidation now. Wonderful. All right. All right. Now, let's start looking at some charts. And this is a crucial skill that we spend a lot of time working with our students on, where to put the support and resistance lines, okay? Now here we are back on our friend, the pound dollar, that gave us some nice pips this morning, okay? You see, I'm looking for multiple touches along my resistance line here, okay? Back to last week, back to last Tuesday, okay? About a week. And lots of candlesticks coming up to this red line here and falling back for a good long while, okay? Then over the weekend, came right back up to that same level and couldn't get above it, couldn't sustain and push above it there. And we had a touch yesterday, a touch early this morning, and now a touch in the afternoon, okay? So this is a pretty darn good resistance level here. Now, tomorrow morning, when I'm up for the U.S. news, okay, let's say it's good let's say it's bad news for the U.S. dollar. I'll be seeing this price rise, but I won't do a buy until I can get above my resistance line here. I usually enter trades about 3 pips above my resistance line or 3 pips below my support line. So I want to see some conviction pushing through those levels before I'm interested in doing a trade. And of course, all my indicators have to be telling me the same thing as well. Okay? On my support line down here, you see I got a nice touch there, some touches here this morning, early this morning. A little bit jumbled in here, not giving me clear signs in it, a little bit jumbled. But now if I keep going back, I got resistance here, and oh my goodness, look over here, resistance, okay? So remember what I said? A lot of resistance here, the same amount that was resistance is now becoming support way over here. Prices seek out historical levels time and time again, okay? Now, I wouldn't be too interested in doing a sell, okay, on this particular trade, because look at my 200, my moving average here. A long-term moving average here. This is called my 200 period moving average, okay? And you can see about 85% of the time, based on our studies and some research, that acts as very strong resistance or very strong support. So you want to be trading away from it most of the time, or if you're trading towards it, you want to have enough room to make your pips and get out of it before hitting that 200, okay? So here's what I mean by that. This 200 is below me right now, fantastic. So I'm okay with doing a buy, okay? So I'll be interested in doing a buy. But if I did a sell, look how narrow a range that is. Very narrow range there between my support level, my red line here, and my 200 moving average, which is right here. Not a lot of room in there, not a lot of pips in there, okay? So I'm not too interested. The risk reward for that trade would not be there for me for doing a sell, okay? So what that means for me tomorrow is that the news is good for the US dollar, and we're still trapped in this range here, which we probably will be. We probably will be trapped in this range until tomorrow morning's news. I wouldn't be interested in doing a sell. Not enough room to make my pips and move on, okay? So I'd look for a different chart. So let's look at the Euro USD, okay? My long-term moving average is above my current price, acting as resistance. Even though we're getting breakthroughs here, it's not an extended run up, is it? What happens is, it breaks through it, but then it comes right back down again. This is the 200 doing its job, not maintaining a nice push up through the 200. So, but here, I have more of a gap between my prices here. So, I might be interested in taking a look at the euro dollar tomorrow morning if the prices continue to consolidate overnight, meaning moving sideways. Okay? Now, Here's a prime example of where I need to look back on a wider time frame. So I had my support line in here. I have a touch there, but I want to see some more touches. So let me look back here. I go from the 30-minute chart to the hour chart. Okay, nothing there. I go to the 4-hour chart. Still more touches. I go to the day chart. Still nothing there. So now I'm thinking, wow, this has been a while since the dollar has been this strong against the euro. Okay, finally, we're on the week chart. Now we're finally getting close. Okay, so now we're looking at about 4.5 years ago. This is May 10th. I'm sorry, this is May 2010. Last time it was this low. If I want to get even closer, I can go up to the month. Okay, now finally I see, okay, here I am. Here I see it. So we have to go back to February of 2006, gang. February of 2006, before we see it, well, that's the same as today. So the dollar has gained a lot of strength over the euro in the last couple of years here. Okay? Now we're still weaker than the euro. Still takes about $1.17 US to equal 1 euro. But compared to 2008, at the height of our financial crisis, when it was $1.61 US to equal 1 euro, way up here. Okay? So, and that's good news for our US economy. And I expect, based on what the Federal Reserve was saying last week, that we should see a rising dollar throughout 2015. So that tells me that anytime I see any retracement, that I'm looking for more selling opportunities or buying opportunities based on the dollar getting stronger. Okay? All right. So look at the same line. Based on the line out now, I put this line in this morning based on what's happening right now on my support levels. But I can go back to 2006, and oh my goodness, I got support levels here, same line. Resistance back here in 1998, okay? Prices seek out historical levels time and time again. This also tells me that if we get some further good news tomorrow morning in the US, and I can break below my 1.17 support line here, I have plenty of room to go for my target profit, okay? So there's lots of things you have to be aware of in order to be an intelligent technical trader. And knowing where to place support and resistance is a crucial part of that, okay? Once again, gang, if you have any questions, feel free to just type them in there. I'll be glad to address them, okay? All right. Now, the US dollar, Japanese yen. Aha! Aha! Interesting. So, I placed this line here about 3 or 4 hours ago, and I got a breakthrough just in the last half an hour when you and I have been together on this call. So I had a red candle pushed down below my support level here, okay? But now we have a slight green candle. Actually, it looks like a doji now coming out. Now, am I interested in trading this? Not quite. Not quite. Even though it broke below my support level, my other indicator down here is not telling me to sell yet. So I'm not interested in doing this yet. And I'm willing to bet that this is going to retrace back above my support level here. But that's okay. That's okay. It's entering through just in the last hour here. Now, if I was trading this without doing a seminar tonight, I might have taken a risk on that, but that's okay. You can't watch all the trades all the time. Okay. Dollar Swissy. Very strong line of resistance here. Very strong line of resistance. Okay. Now, it's been a while since the US dollar was stronger than the Swiss franc. You see right now it takes about $1.01 Swiss to equal 1 US dollar. We've been weaker than the Swiss franc for a very long time. If you look back, very long time, we've been well below the Swiss franc. Well below. I mean, the last, my goodness, I'd say 3 or 4 years, we've been below the Swiss franc. It hasn't been until recently that we've gotten at par or slightly stronger than the Swiss franc. Okay? So this will be another one I'll be watching very closely tomorrow morning, because I'm willing to bet we're going to get nothing but consolidation, sideways movement overnight, and it will give me a trade tomorrow morning. Okay? I can kind of see already a little bit of a support level shaping up right here. Okay? We got touches there, support here, so resistance here is now support here, resistance, resistance, okay? So resistance there, support here. So I'll be looking, I still have enough room between my support line and my 200. So if I'm still trapped in this range tomorrow morning, this could give me a good trade to either side, okay, to either side. Take a look at one more for us here. So look at the Aussie dollar. Oh, the Aussie dollar broke above my resistance line here in the last hour or two. Interesting. Very interesting. It's giving me about 14 pips there, okay? But now you see it started to stall out right here at another level of resistance here, which is interesting. Now, I'm not going to trade this right now. I'm not going to trade it, but I will be watching this one after we're done with this webinar. This could give me another entry point later on tonight. So I'll keep watching that, which is a little bit interesting. Very interesting there. Okay. Dollar Canadian. Okay, very clear line of support here. Not terribly interested in this right now. I could put a line of resistance up here very clearly. But I might even bring that down depending on what happens overnight. Okay. So again, gang, learning what to do with support and resistance is crucially important. Knowing where to place the lines, why you're placing the lines, understanding the historical levels, looking back when you need to, they will help you with your timing of the trades and helps you get more higher probability trades than just trying to do the technical analysis alone, okay? So I hope that clears it up for you. Obviously, we go into a little bit more detail in the private coaching sessions, but never, never, never underestimate the power of support and resistance, gang. Crucially important, okay? You see I have a couple more ranges in here on the dollar Canadian already. So lots of good things happening tomorrow morning, gang. Lots of good things happening. Actually, tomorrow morning, Thursday morning as well. You see we have our unemployment claims and PPI numbers coming out on Thursday. Also, morning we have the German president speaking, okay? Friday morning, we have CPI and core CPI numbers and the consumer sentiment numbers coming out, all high impact events. So today and yesterday were kind of slow news days, very slow news days. But the rest of the week should be really, really giving us a lot of trading opportunity. So you put it all together, you learn how to do this, it's a wonderful way to make a living, gang, or add to your income. It really is. So I want to encourage and support of all of you to keep learning, keep coming to these seminars. Please join us as a client. We live to teach this. We live to help our clients achieve their financial goals. That's who we are. I know everybody says that, but give us a chance to prove it to you on a daily basis. All right. Lucinda, in your opinion, what are the top 3 or maybe top 5 most important tools to utilize and understand to do this? The top one, I would say, Lucinda, is psychology of trading, okay? Because we're all human. I've been trading for over 20 years, and I'm pretty darn good. But I'd be lying to you if I say I never get emotional when I'm trading. I don't think any trader, no matter how good they are, can say they are 100% systematized. That's our goal, right? It's our goal to get you all to be systematized traders, to simply trading what you see rather than a hunch or getting stubborn or getting angry or all of the parts of the human emotion that we have. So we go into detail with our psychological, we have whole entire chapters in our homework that you guys have as personal clients. We have 20 different homework modules you go through. It's a serious course, okay? And we devote 3 of those modules to the psychology of trading, understanding how to harness your emotions, trading what you see, sticking to your systems, not getting distracted, understanding what's happening and why, trusting your system, because trading will test your nerves sometimes, absolutely, okay? So psychology of trading would be number 1. Number 2, having a system that you can master. And there's a lot of information out there. And I won't say that ours is the best, I won't. What I will say, you can master what I teach you in the private lessons. Our goal is to get you to about 80 to 85% winning ratio. If you can average that and cut your losers short, you will be a very happy trader and have a great chance of making those 20 pips or more per day. Okay? But it's very easy to get distracted, especially when you go through rough patches of trading. And you got to say, well, this system isn't working anymore. I'm going to try something else. I'll try this thing over here. I'll try automated trading. I'll try this system over there, and you get distracted. Like Warren Buffett says, stick to a system, find a system that works for you and stick with it through thick and thin. Okay? Then, of course, third, someone to look over your shoulder, because rare is the person who can just pick up a book or take a few seminars or a few classes here and there and then do it all on their own. You need somebody that's going to look over your shoulder, it's going to hold you accountable, it's going to tell you the good, tell you the bad, tell you when you're trading well, trading when I'm seeing emotions in your trading, tell you when you need a little bit of a tough love, kick in the butt, all those things. You need somebody to motivate you along this path. Okay, I've yet to meet over 20 years anybody that can do it. I'm sure they exist, but they're few and far between in my opinion. Okay. All right, again. You're welcome, Lucinda. Thank you so much for your time tonight. I really appreciate that. I know you have other things to do on a Tuesday night, but thank you for spending it with us. We will see you again on Thursday evening. So thank you again for today. Again, if you have any questions, I'll type my phone number in here. Feel free to give me a call. If you have any questions about what we covered here tonight, or just questions in general about the program, feel free to give me a call. And we'll see you on the road.